Hey, what's going on, my friends? Happy holidays to everyone out there. In this video, we, of course, will take a look at our dividend portfolio like we do every weekend, but more, specifically, I wanted to share this little article with you, 3 Dividend Aristocrats to Buy and Hold Forever. These REITs have been growing dividends for decades and could continue for many more. I thought this would be a great little gift that I can give to those of you out there interested in growing your money, because that, of course, is what this channel is all about: making, managing, and growing your money. And off the rip right here, you might notice realty income, which is part of our dividend portfolio, is mentioned first in this article. But really quickly, you might not be familiar with Dividend Aristocrats. Well, Dividend Aristocrats are a royal court of S&P 500 stocks that have raised their dividend payouts each year for at least 25 years. The list is reviewed and updated each year by S&P Dow Jones indices. And investors seeking passive income from reliable companies with strong records of growth and returns can do worse than focusing on these dividend stocks as avenues for increasing wealth. These are 65 companies on the Dividend Aristocrats list, and 3 of them are real estate stocks. In fact, all 3 are real estate investment trusts, REITs. So, of course, you can see Realty Income has 26 straight years of dividend growth, but they also have Essex Property Trust with 27 and Dividend King, the Federal Realty Investment Trust, at 54 consecutive years of raising dividends. So Realty Income, our baby, who is part of our dividend portfolio, pays shareholders monthly and marked its 26th straight year of raising dividends by doing so 5 times in 2021, culminating with an increase of 0.0005 cents from November to December, ending the year with a monthly dividend of 24.65 and an annualized payout of $2.96, good for a yield of 4.30% based on a December 22nd share price of $69.15. Further burnishing that record, Realty Income has offered 617 straight months, more than 51 years, of paying out dividends. With a market cap of just north of $38 billion, San Diego-based Realty Income leases to more than 650 operators in all 50 states, Puerto Rico, Guam, the UK, and Spain. Its top 5 clients are 7-Eleven, Walgreens, Dollar General, FedEx, and Dollar Tree, or Family Dollar, as some of you might know it. So, hey, this kind of helps to explain why I put Realty Income in our dividend growth portfolio. But you guys might be interested in some of these other REITs as well, potentially. So keeping things moving, you can see we have Essex Property Trust, which declared its first quarter dividend increase of basically almost 11 cents, or a little over 11 cents per share, to its current $2.09 dividend, continuing the regular raises the company has given shareholders since it went public in 1994, with a portfolio of 16 multifamily communities. The dividend was good for a yield of 2.45% based on a December 22nd price of $343.63 per share. Now, with a market cap of basically, $22.4 billion, Essex is a buyer, developer, and manager of about 60,000 apartments, and it owns or co-owns primarily in South Carolina and the San Francisco Bay and Seattle areas. Again, might potentially be a REIT that you would want to consider adding to your portfolio. Never legal or financial advice, of course, but it clearly has been doing well and looks like it might continue to do so. Last on this list is the Federal Realty Investment Trust, which in September The Federal Realty raised its quarterly dividend by, what is that? Pretty much a cent per share to $1.07, keeping intact a run of annual payout increases dating back more than half a century. It has a market cap of about $10 billion and a yield of 3.26% based on a December 22nd price of $132.59 per share. Its payout record also makes it the lone REIT in the list of about 30 dividend kings in the S&P 500, and those companies that have raised their dividends for at least 50 straight years. Federal Realty offers investors a portfolio of 106 properties that include more than 3,100 clients, mostly realtors, and 3,200 residential units in major coastal markets such as San Francisco, LA, here in Boston, and Washington, D.C., near its home office in Maryland. So as you guys can see, we started this portfolio back on February 1st with $100. We had 10 companies in our portfolio. Then, started adding $25 every week. We got to about March 5th, hit that, stimulus check, decided to invest some of that money, which was $500. As you can see, it jumps up $500. And every week since then, we've just been contributing $25 a week. And you can see this is sitting pretty at over $1,900. Now, hey, it's taken a little time to get there, but nothing great, nothing beautiful happens quickly, right? Nothing happens overnight, and it's a nice little journey. Sometimes it's taken some dips here and there, and it's kind of leveled out and plateaued a little bit. But as a whole, when you pull back, you can see there's been a nice, steady, healthy incline. And this is exactly what you want to see. Your money continuing to go up and grow for you. And hey, I have no complaints right now. Things are looking pretty good, but we might be curious to see who is performing well, who's not doing so well. Maybe where is Realty Income today at this point in time? Well, as you guys can see, we have Pepsi at the top of our list today, currently killing it at 33.85%, followed by Newt, which is standing at 32.34%, Procter & Gamble up 27.56%, then Coca-Cola up 21.22%, followed by our baby Realty Income Corp, who's standing at 17%. And then Johnson & Johnson is at 8.81%. JP Morgan Chase is 6.14%. And then Innovative Industrial Properties is at 4.25%. Unfortunately, we do have a little red in the mix again, and that is Verizon Communications at negative 3.18% and 3M at negative 6.28%. Now, hey, things are going well as a whole. I am not mad, no complaints. Of course, I always expect to see a little red, but yeah, this is looking really good. And when we look and see, where is this gains coming from? Well, $91.23 is the market gain, and then our earned dividends currently sits at $48.28, with, of course, Newt standing at the top of that list at $15.28, followed by Realty Income Corp at $4.18, which I don't believe they were second last time we looked at this. So it looks like they had a recent little payout that helped to put it in that, that number 2 position. And then Verizon Communications is at $4.15, which again, and this is a good reminder, despite them being at the bottom of our list a moment ago, for the actual stock price, they are sitting at that number 3 spot when it comes to our earned dividends. So this is, again, the power of a dividend portfolio, where the stock price might be down a bit, but despite that, we are still getting our earned dividends from them. And technically, our earned dividends is greater than how much our stock price has gone down. So if anything, it's kind of evened out in that sense, or not even. If anything, it's still profitable. But the stock price is down at this moment in time, which is cool, which is fine, because we believe that it will be higher in 5, 10, 15 years from now. And that's exactly what this dividend portfolio is all about: getting your money to work for you and grow for you over, a range, a long span of time. So I'm curious, what do you guys think? Are we loving this so far? I think I've only heard and seen good things, but of course, not everything is always so beautiful. Our growth portfolio is not looking so good right about now. Definitely in the red, but the market has been pretty choppy recently as well, and a lot of big wigs, a lot of big whales out there selling, for tax reasons and whatnot, tax harvesting and all that fun stuff. So hey, we know it's part of the territory, but I'm loving how things are going right now with our dividend portfolio. And if you guys want to start to get your money to work for you as well, I do have a link down below where you can sign up with M1 Finance, start investing, start growing your money, create your own portfolio. It doesn't have to be a dividend portfolio. It doesn't have to include any of these companies we have in this portfolio. Maybe it has one or two of them in some of your own companies. But either way, definitely get started with getting your money to work for you, and consider using my link down below where you can get some free cash when you start and fund your M1 account. And I believe, hey, I'll have a link down below to BlockFi where you can invest in crypto and, they pay you interest. Got a link down to Webull where they'll give you some free stocks if you start and fund your account. And right now, I think they do have a holiday special. What is it? Up to like 5 stocks now at this point in time. So definitely got some nice kind of end of the year holiday deals going right now. So a great time to start to invest and, give yourself a gift of growing your money. Start to grow your cash. So I'm going to wrap it up there, but hey, much appreciation for watching. If you guys thought this video was helpful, motivational, encouraging, or anything of the sort, definitely give it a thumbs up. And of course, don't forget to hit that subscribe button and the notification bell so you can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know I got to keep it moving. Much appreciation to you. All of you guys out there still watching. Happy holidays. But yeah, my friends, you already know. I'll see you in the next video. Peace.